For many people, home ownership equates to the promise of safety, security, and a place where they can be entirely themselves. Unfortunately, today not everybody can buy a home, specifically because they cannot get access to a mortgage from a bank or a lender. This news article from May specifically shows how banks are pulling back from loaning to lower income and lower credit score clients. Fewer mortgages are going to low income borrowers. People with low and moderate incomes only made up 26% of all of the borrowers in 2017, which is way down from almost 37% in 2009. This is why my wife and I created the Seller Finance Center. You could find dozens of articles that talk about the concept of seller financing, but they still don't teach you how to do it. At the Seller Finance Center, we've created the most complete set of classes, tools, and resources to help you buy a home with seller financing. And we have a specific curriculum for buyers who generally can't buy a home with traditional mortgage financing, and that's their barrier. And we also have classes for sellers who can have their own challenges with selling their home. My wife, Len, and I really believe that anyone with the financial means should be able to enjoy the benefits of home ownership. And our classes are designed from the grounds up to give you that education, to give you the tools, and therefore give you the confidence to be able to buy your dream home with seller financing. So hi, let me tell you a little bit about myself and my wife, Lena. My name is Jeff Grudan. I started out as an engineer. I got a degree from the University of Virginia back in the 80s. A few years later, I got a business degree at Duke University. I then spent the next 24 years at Compaq Computer, if you remember them, and Hewlett-Packard, retiring as the VP and general manager of one of their most profitable PC businesses. Along the way, I led product groups that were larger than $5 billion. And all this corporate experience gave me two things. One, it gave me a very solid financial acumen, which is why I always find seller financing so fascinating. But it also gave me, or taught me, I'll say, the skill to make complicated topics relatively simple. And that's what I hope we can do in our class. Once I retired from HP, I joined my wife's real estate company. She'd been very successful in real estate. We founded Loyalty Property Ventures and a number of other real estate entities in Houston. And we do residential projects, commercial projects. We flip houses, we fix up houses and we rent them. And of course, as you might expect, we do seller financing. We've done about 13 million in real estate transactions to date. But seller financing has always been one of the projects that I think beyond the whatever financial gains we might get when we're involved, they're by far the most satisfying kind of project. To get a buyer into a home that had not been able to find a way to own a home there's nothing more satisfying. Of all the projects we do, there's nothing more satisfying to see that they get the keys, and sometimes we're able to go visit them later and just see that happiness and what they've done with the house. It's very, very satisfying. And that was really kind of the genesis of this class. Is because we enjoy the outcomes of those projects so much. In fact, the house that my wife and I are currently living in, we acquired through seller financing. So this is really a type of project we really enjoy. So let's jump right back into sort of the content and talk a little bit about why buyers cannot get traditional mortgages. If you remember, there was a housing crisis back in 2008. Since then, it's gotten quite hard to qualify for a loan, and as I think I mentioned earlier, about only 63% of Americans own a home today. And that's a lot of people that don't own a home, and many of which would like to. Why can't they? Well, some have credit issues. The FICO scores you need to qualify for a loan have probably gone up on average about 100 points. So, if you were on the high end, I think the median has gone up from about 650 to 750. and the low end has gone from about 550 to 650, round numbers. So it's gotten harder to get a loan. You can still sometimes get them if in the 500s, but you really got to work at it. So credit issues are a big inhibitor. There's a lot of people that just don't have a large W-2 income. A lot of self-employed people, they may have a great income. They may have a great looking bank account, but they don't have a great looking W-2, which is unfortunately what the banks like. I've been in a number of different real estate classes, and everybody always talks about the same concept, which is a very high net worth person, let's say they're worth $10 million, but they don't have a W-2. They can have a super hard time getting a bank loan for a house. It's crazy. Somebody with maybe $100,000 W-2 income, but very low net worth, can get a bank loan. So there's this heavy emphasis on W-2 income. And that can be a challenge, even though you have the cash in the bank and you have the income to certainly afford a home. Maybe you had a previous foreclosure. And I see it a lot where when somebody was younger, they got in over their head. They end up having to be foreclosed, and that black mark is still on their credit, and banks shy away from those types of borrowers. And lastly, maybe you don't have a Social Security number. And again, there are ways of buying a home without a Social Security number, but it can be challenging. So seller financing is a great solution if any of these are the reasons why you are having a hard time buying a home. So what is seller financing? So in its most simple sense, it's very much like buying with a traditional mortgage. The only difference is who is playing the role of the bank. So let's walk through a traditional mortgage sale. The buyer would come and they would pay the seller a down payment. They would come to closing at the title company with a check for $10,000, $20,000, whatever it is. And they would bring a bank or a lender to bring the balance of the sales price. So the bank brings money, the buyer brings money, and they pay the seller. After they pay the seller, the title transfers to the buyer. So the buyer now owns the home. They are on the title for the home. And then that buyer would start making monthly mortgage payments to the bank. Okay, so very similar. I mean, hopefully very consistent with the way you guys understand how homes are sold. And then the seller is out of the picture. Seller has sold the home. They're off title. Maybe their loan is paid off. They move on. They're out of the picture. And the balance of the relationship with that mortgage is between the buyer and the bank. Okay. So seller financing, it's very similar, except that the seller is taking two roles. Okay. They are the seller, but they're also now the bank. So the buyer would bring a down payment, but not a loan from a bank. The bank is basically the seller. Title would transfer, just like a traditional mortgage. But here's the difference. Those mortgage payments would be going to the seller, who again is playing the role of the bank. Okay? And so they stay in the picture because they stay in the picture not as the seller, not as the owner, but they stay in the picture because they're playing the role of the bank. So it's very similar. Title transfers, buyer has a monthly mortgage payment. It's just who's playing the role of the bank. Okay? So let's focus on the buyer for a few minutes. What are the benefits to home ownership? So why would you want to go through all this work that's potentially buy a home seller financed versus just renting? And in our class, we will do a very detailed analysis of the pros and cons of renting versus owning a home, and where the different costs are. But simplistically, there are the emotional components, which is a place to call your own. You can modify the home as you like. There's no landlord who can tell you what you can or can't do. There's no landlord who could show up and say, I'm not going to re-up your lease and you have to move. Okay, you own that house. But there's two very cool set of financial benefits to home ownership that I want to talk about. One is about creating long-term wealth, and one is about saving money. So you can create significant wealth by owning a home. And largely this is done by the equity that you build in your home. And you build equity in your home in two ways, through appreciation and through principal pay down. So appreciation simply means that every year the value of your home will probably go up a little bit. So if you bought the home for $150,000 and every year it appreciated maybe 5%, which is a very achievable appreciation rate. You might see lower, you might see higher, but it's a very achievable appreciation rate. So I've done the math, and so in 10 years, with just 5% appreciation, again, appreciation is so powerful. With just 5% appreciation, that home that you bought for $150,000 is now worth $244,000. So you've created almost $100,000 of wealth just by the appreciation of the home. In addition, those mortgage payments you make every year, you're paying down the principal as you do that. So the principal is the balance of the loan. So if the balance of the loan started at $150,000, in 10 years, that balance of that loan is only, that would be what, $122K. Okay? Which means your equity has gone up by $28K. So when you add the appreciation to the principal pay down, you now have created $122,000 of wealth. Okay, there's not a lot of ways to create that kind of wealth other than owning a home. And so again, owning a home is a great long-term net worth wealth generator. Now, in addition to generating wealth, you can also generate savings. So different from a rental, you have to pay property taxes and you have to pay interest on the loan. But these two expenses are tax deductible. So on that $150,000 home, I assume about a 3% property tax. That's $4,500 deduction each year. And if you assume you have a 20 to 25% tax rate, you're going to save somewhere on the order of $1,100 off your taxes. Similarly with interest, you'll pay about $7,400 in interest, which you can deduct from your taxable income, and that will equate to about $1,850 of savings, again, assuming maybe a 25% tax rate. So total tax savings each year is on the order of $3,000. So you create wealth and you save money through tax deductions each year, okay? Really powerful stuff. So why else would you buy with seller financing? So there are other benefits. So obviously the not having to deal with the bank means more lenient credit requirements. So the seller is not going to look at you from a credit perspective quite the same way. They will look and they may care, but I think what they're really going to care about, in my experience, it's almost always going to be, do they have cash for the down payment? Can they afford their monthly payment? Okay. In addition, sellers going to be much more creative around the financing. Banks are not creative. Banks, this is what we have to offer, take it or leave it. That's a bank. A seller might say, you know what, I want more down payment. And you say, okay, I can give you more down payment, but I'll probably have to lower my interest rate a little. Can you lower my interest rate a little bit? And so there's a give and take that you can do with seller financing and create any number of structures around the financing. And in our class, we'll take you all through these different structures. There's also going to be lower closing costs. There could be as much as $2,000 lower closing costs, simply because there's not a lender. Lenders ask for lender's insurance. They ask for all kinds of different appraisals and other things, and they charge you for all of that. And that also takes time, which means if you close without a lender and you work with the seller, you can close more quickly. So there are a number of other benefits with seller financing. So let's flip the script. We've talked about all the benefits to a buyer, but why would a seller want to provide seller financing? Well, first and foremost, they just may not be getting the offers that they want. They may not be getting offers. Their house may be sitting on the market and have a very long days on market. Maybe it's been on the market for 6 months and they haven't sold it. And that often means that they're not getting their price. I will tell you, sellers can get very emotional about their price. They may just get in their head, the neighbor sold their house for $150,000. I'm not selling unless I get $150,000, even though the neighbor's house might have been much nicer. And so for them, seller financing means that they can expand their pool of buyers. They can bring in a whole additional set of buyers that they may not have seen originally, and they can differentiate their house to you, right? So if you're looking for a seller finance house and they've raised their hand and said, hey, I'll sell seller finance, you're going to knock on their door first, right? Versus maybe knocking on the door of somebody who did not offer seller financing. So sellers want to sell, and if you give them a slightly better sales price, you may get that deal. The other type of seller is a little different. They just might not need the cash right now. It's not so much that they're stuck on a sales price, but they may not need the cash. Maybe they're an empty nester, the kids are off to college, they're going to a smaller house. They want the income. They want to act like the bank. The bank makes money. Take a step back. The only reason the bank will loan you money is because they make money when they do it. So if the seller can play the role of the bank, they'll make money. So for them, they don't really need the cash in their pocket. They would invest it anyway, and this may be a better investment. So for them, it's about maximizing the return on the investment when they sell their house, maybe creating an income stream. Okay. So why is seller financing not used more often? Well, the first answer is it's just not very well understood. Many realtors, not very knowledgeable about it. They'll shy away from those kinds of deals because they haven't done them before. You as a buyer may not know where to start. Like, what do I do first? And sellers, the biggest barrier for sellers is they think it's risky. They don't understand how to do it, but they also think it's risky. What if something goes wrong? What happens to my money? What happens to the house? And no one, at the end of the day, no one has created a complete step-by-step process that shows you how to do it until now. So our course provides you with a step-by-step guide to buying a home without a bank mortgage. Finding homes and sellers, understanding the numbers, presenting offers, negotiating, overcoming the inevitable seller objections, closing the deal, managing that loan over time. How do you get your tax benefits? Providing a toolkit, give you the ability to ask questions. And so our class will give you all of that. It's a complete step-by-step process for buying and selling homes with seller financing. Okay? And so special offer for you guys today. The first 100 users that go and register, we'd like your email address. We're not asking for credit card, just an email address. Register for the course. It will go live in about 30 days. And we'll give you a special one-time offer to take it for $99 instead of our normal price of $399. Our only request is give us feedback. You'll be our first set of students, and we want to learn from you. You'll have access to the updates as we make them. So, but if you come tell us as, hey, I love the course, but I didn't understand X, or it would be great if you provided tool Y. We want to take that feedback, and when we re-release the course with some of those additions and charge full price to everybody else, you'll continue to have access to that updated course. We've worked really hard on the content we're going to provide, but I'm sure you guys will find some things that maybe could make it better. So our only ask around this special offer is that after you take it, if you think you have ideas on how to make it better, please give us feedback. Okay, so until then, we hope to see you at Seller Finance Center soon, and we hope to see you in your own home soon as well.